Hey everyone, welcome back to this video. I'm going to make a quick trade recap on today's trade, the trade I shouldn't have taken and the trade I did take, and I'm going to go through the trade I did take, which was a huge trade. I didn't catch the entire move, I never do, but I'm going to go through how you could have caught it. So in terms of your key level, where you're looking to trade from, why I took the buy, which was stupid, why I then took the sell, which was for the opposite reasons I took the buy. So we're going to go through that now. So I had one question from someone about my key level. So this was the level I obviously traded from today. This was the short, which came at around just before 11 a.m. Eastern, or just after 11 a.m. Eastern, around that time. So this key level, this kind of thin gray box you see over here, the reason this was a key level, I'm going to break this down so people understand. It was a flip area. Now, what I mean by flip area is that I actually had this key level from basically the start of the month. And what happened is I taken a short, so price held as supply. Then, of course, we broke it, held as demand. Then it held 2 times here as demand. Then, if we keep going, it held as demand probably about 3 times over here. Then it held as demand for a 4th or 5th time over here. Then, of course, the Trump news came out, and then we held as supply. So this is basically a flip zone. It is a key level. It is definitely a key level because we had held previous times in the past. So we had actually formed a demand zone here, and then of course Trump comes along with these tariffs and he makes it a supply. Now, just a quick note, we don't care what Trump does in the markets. We don't care about his tweets. We don't care about his tariffs. We don't care if he declares war on whatever country, Iran, whatever it may be. It doesn't matter if he declares war on Russia. Our job is to trade supply and demand, not Forex Factory. We're not here to trade Forex Factory. We're not here to trade CNN. We're not here to trade the BBC if you live in the UK. We're not here to trade any of these news events, right? We are here to time the markets with supply and demand, with order flow, with buyers and sellers, with key levels. This is the only thing that you need as a trader, especially if you're a day trader. If you're an investor, it's different. But if you're a day trader, this is what you need. So we came into this level, and it's no surprise it rejected as supply, because what had happened is it was already holding as a supply from Friday the 10th, right? It's the same key level. So what happened is there were passive sellers that stepped in over here, and this is what I'm going to break down for traders. So if you go to the 1M, I didn't take this bottom trade over here. I just want to quickly go over my stupidity of taking the long. So this is the long I took at whatever it was, whatever time that was. 20 past 10, stupid trade. Almost took a 1 hour loss. I think I exited just before I hit my stop loss. Completely stupid. The reason that trade was stupid, if I quickly go up to the 5 minute, was because of this, right? Look at this, everyone. Look at this. If I go to indicators, type in PO3, I want traders to focus on this indicator here, the most powerful indicator in your trading. Now, if we go back to the day, so let's just fast forward here. This was the daily candle. Now, with the daily PO3, I tick use NY midnight, which is the New York midnight opening price. Now, this is the daily opening price. So we've tapped into a key level. That's kind of step number 1. We've had a rejection off this key level. Step number 2, rejection is with order flow. I'll go over that in a second. The daily opening price is all the way down here. So what's interesting to see is this. Now, when you're above the daily opening price, right? So you can see over here, we're way above the daily opening price. So you can see this wick over here. We're way above the daily opening price. We're also above the weekly opening price, right? The weekly opening price is all the way down here. The daily opening price is all the way down here. So this is kind of step number 3. So the higher you are above the daily opening price, above the weekly opening price, the more you want to be selling, as long as you have a key level and you have an accurate rejection off a key level. So this trade here went all the way down to the weekly opening price, which is basically how the markets work, right? The markets will expand based on the weekly opening price, meaning we will move up, we'll create the high of the week around Tuesday/Wednesday, and then we will look to sell when we're above the weekly opening price. Now, we pair that with a key level, which I've just gone over, and we pair that with a rejection. Let's quickly go over that rejection. So rejection is step number 2. So key level, entry, and order flow. So let's understand the key level we were looking at. So, I mean, I only caught that much of the trade. I don't look to catch the entire move, but when we do have a move that looks like that, we went all the way down to the weekly opening price. It's worth understanding, what was going on, right? So let's quickly break down the setup I took. So there we are, 288, even though the trade itself went down to almost $500. So I'm going to break down what was going on over here. So even without reading the numbers, I'm going to do a separate video on the numbers, but even without reading the numbers, you can see here there's aggressive buyers, aggressive buyers, aggressive buyers, aggressive buyers. So what we had is we had an entry, we had a breakdown here, break and retest. So this was your retest over 5, 10, 15 minutes. What you can see here is we break below a body. We break below the initial retest. Aggressive buyers fail to break above the level. So this blue box over here, what it shows you fundamentally is that aggressive buyers have failed to break above the level. So if I kind of zoom in here, what we needed to understand, what was going on over here, was quite simple, right? We saw aggressive buyers in this region. We saw price break. We had a retest, and then we entered short here. But what was going on over here? Good question. Now, all that was going on over here was we saw aggressive buyers hitting the right hand number, sorry, and they failed to break above the level, right? We saw the markets breaking below. So we had break, retest, and then we broke again. So the retest essentially shows us aggressive buyers have failed, which means passive sellers are in control. Sellers are in control of the market, right? And that is the only reason the market moved down. I want traders to understand that is the only reason the market moved down, right? Also, just a quick note for those who don't trade, I guess, SMC or basic ICT concepts, this was the 50% area. So we're in the premium. We're above the weekly opening price, which was somewhere down here. We're above the daily opening price, and we've tagged into a key level. And most importantly, those aggressive buyers have failed. So passive sell limit orders are in control. So this was an A+ trade, which had all of the confirmations, right? All of the confirmations were available and applicable to this short trade.